back to the channel. Going to talk about Walkabout Resources, one of my high conviction stocks. Could be wrong on it, could lose all your money. It's not financial advice, just my opinion. And I'll say stupid things in this video I might not agree with. And in the future, you can watch this video back and say, that was stupid, we don't even use that graphite anymore. So they're the risk you take. So why would you want to buy this company? Because it's in the natural graphite space. If you look what happened to lithium, prime example how to make money in the stock market. Find a rising thing. EVs were making lithium go up crazy like this. So I didn't actually know this years ago that like a metals like iron ore went from $20 to $200. Like now I'm more familiar that if there's rising demand, prices can go crazy, and you have to buy before they go crazy to make the money, obviously. So 2020, lithium price down here, supply outstripped demand by lots, and this happened. CXO, it was something to do with lithium price, but also to do with them only have to spend $100 million, now making $500 million a year EBITDA, or about to be. So that's why they've gone so well, obviously coming back down the lithium price as well. So that's what you aim for. Something in a growing sector, you can buy low and ride it up when the price of the material goes up, and also has a low capex. Low capex, pretty important in my books. So WKT, raw figures, buy it for $70 million. It's a rabbit hole how they finance this. Bit debt, bit of equity. So what happened here? They raised money at half the share price, and that's where I thought was a pretty good buying opportunity. Could be wrong. This stock could go to nothing. So yeah, if you buy it for $70 million, basically comes with a mine that's getting built right now. They expect to be making money later this year. So for the $70 million, they say they're going to make $25 million after all costs. So EBITDA is like $50 million, but after all costs, $25 million cash in the hand, Australian. So if this company is making $25 million a year after all costs and tax, it's going to be worth a lot more than this. But I don't expect production to go smoothly. It's not as if they're going to make this and like everything just goes perfect. There's probably going to be hiccups as well. That's probably the same with every company. So obviously, yeah, but they're ahead of all the other companies anyway. High grade resource. I think it's like 22.5% for 1 million tons. So just compare that with others. That is very high grade. 1 million tons isn't huge in the ground, but that's enough to get started. And guess what? They can near mine drilling this many tons, so times that by the grade, or even lower than the grade, 15%, 4 million tons in the ground, which gives them a really, really long mine life, depending on how much what they want to get of the ground, etc. So then they got 20 kilometers from there, they got another, times that by 15, so that's probably even double. They got heaps of tons in the ground, is what I'm trying to say. Basically, I'm not going into all the finer details, would be here forever. So latest announcement, they got funding. They got the funding pulled by the African government or something. That's why they struggled last year. And I was like, definitely going to get funded for this project. If you look at the numbers, it looks pretty good compared to everything else in the ASX. So, yeah, basically, what happens to Sasa now, they just keep going, build the mine, get into production, iron out all the kinks, and sell off and sunset. So basically, guess what? If they can make $25 million a year after costs, they're going to probably double, well, they'll pay the debts back, and then guess what they'll do? They'll double production. So they'll go 50 million tons, 50 million per year after costs, because they double production. These are just rough figures, and that will put them a lot more than this. You probably even think a $500 million company. And that's with not much dilution, because they've already raised the money. Other companies have to raise the money, build the project. These guys have pretty much almost built it. And that's, so say they double production, go $50 million a year. This is like best case scenario. And then guess what happens? The supply crunch for natural graphite happens, and prices might not go as crazy as lithium, but maybe they go half as good. And that's how you make money. But saying that, it could go terribly wrong. Yeah, so it's risky, but you have to risk it for the biscuit. So why do I think, and just another note, yeah, I do think we're definitely going to EVs every day. We're getting closer and closer. They're getting cheaper and cheaper. Doesn't make sense to burn your diesel car and then buy an EV. Diesel cars are going to be, your own car now in the garage is going to be more cost competitive, but people buying a new car, it's almost going to be a no-brainer to buy an electric vehicle, especially if you're putting solar on your roof and batteries, etc. Just my opinion, could be wrong. And guess what? Natural graphite doesn't look like it will get taken out of the battery. There's always like, oh, this battery will be the next big thing, but natural graphite is here and it's working. Like, we don't reinvent the wheel. Like, let's not reinvent the lithium-ion battery. Let's just make it cheaper by making more of it, etc. is what I think. Yeah, so I'll leave it at that. This is one of my high conviction ones. So basically, if you didn't know, raw figures and saying what they say in their study, 70 million to buy the company. Doesn't have a lot of cash. I think they're like a few million. Basically, they finished the mine. They go in production. The first year they made $25 million after costs. And guess what they do? They're probably, if halfway through there they're doing that well, they're probably going to say, we're going to double production if the demand is there. They didn't really say they're not selling to the battery, they're selling into the other markets for natural graphite, because that's getting more money right now. I think the battery anode stuff just coming out of the ground is $700, and they'll sell prices like $1,600 into the other markets. But then obviously if natural graphite goes like this, could be a different story, and they might think about switching into the natural graphite sector. See the expandable graphite. Downstream development, so they're going downstream as well. Interested parties. So I'll leave it at that. Yeah, one of my high conviction stocks. I don't think you can give me numbers for a company that look better than this, in my opinion. Could be wrong, and there is a lot more risk. There's risk with everything, but probably the best numbers I've seen. Could be wrong. I have to say I could be wrong every time, because definitely could be wrong. And I'll leave it at that. So other company I think might go well. This could be the CXO of natural graphite. I think they were $30 million company here. Now they're $1.6 billion. Didn't have to dilute so much like these guys. These guys are near existing infrastructure in South Australia with all new renewables. They have a massive mine. They just got to confirm that their big mine can go into the battery easily. They're working that at the moment. So they got that. If they drilled out these two big things, they've got like a 100-year mine life, and it's going to be a low capex because they're near existing stuff. And RNU has already done the study. They're right next to RNU. That's how I know the capex is going to be good compared to peers. And it's in Australia, so maybe you think, oh, jurisdictional risks with Africa, etc. So iTech Minerals, could be wrong, but I think it's a pretty good company as well. Yeah, and there's definitely other natural graphite companies, but I'll leave the video at that. Thanks for watching, and I think I've seen every single natural graphite company, but let me know in the comments below with some rough figures, and also let me know of anything else. I don't like gold, diamonds. I prefer stuff that we need, like uranium for power, nuclear power. Could be a good sector. I haven't really studied those companies. And also copper is going to be a good one. Thinking about copper, couldn't do a CXO like spend $100 million, make $500 million a year. You have to spend $1.3 billion to build a copper mine. Although copper, there's a lot of lithium in the ground. They keep finding when they drill copper. They've been trying to find it, and they can't really find it. That's the thing with copper. It's hard to find, so maybe copper's going to boom out in price, but a resource can only go so high, then people don't buy it because it's too expensive. But, yes, not sure. There's too many things to talk about, but yeah, thanks for watching. Like and subscribe, and let me know in the comments below any good companies with some numbers supporting your claim that they're good. And that's it.